Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, the fear of Contagion is back in the game. Certainly the movements on the Turkish lira have really caused a bit of shudder down the spine of investors. Traders around Europe certainly feeling the pinch with the equities on the DAX and the CAC really under pressure. The euro coming under pressure as well amidst the sign of contagion potentially coming through the European banks from the weakness of Turkish debt, and Turkish lira as well generally is coming under pressure. So we've seen that lira weakening 15% on Friday. That weakness has continued on Monday, and how this progresses throughout this week will be key. There's not a great deal of data to really follow in the next couple of days from a big global perspective, so this is going to be an interesting move that I think is going to play out early this week. Interesting that the equity markets have started to focus on fear and contagion and emerging markets once again, rather than earnings season, which is pretty much winding down now, so that's a bit of an issue as well. Now, this week we've got a bit of a focus on sterling, you could argue, certainly with the amount of Tier 1 UK data on the agenda, and that will be sort of looked at as a bit of an important move, because obviously cable has been under pressure, euro sterling has been rising, and the direction on sterling has been a key factor with Brexit on the minds of traders. Now, moving on to the FX markets and how traders are sort of looking at the euro dollar. Well, we've seen a big breakdown below 115, big figure. This has been a key floor on euro dollar for the last 10 weeks. That broke down, completing a range breakdown of around about 350 pips. That gives us a downside target of 1150. Really strong move to the downside we saw on Friday, confirming on Monday. Looks like any recovery we see in that euro dollar chart is going to be a chance to sell. Similar sort of story on cable. Cable weakness has been ongoing for the past few months. Breaking down below 130, big figure, breaking 29, breaking 28, and now we're sort of looking at the 27 barrier to be broken to the downside. 2770 was an old support back from 2017. That's been broken. All these are supports that continue to be broken, and I think it just shows that any sort of recovery we get in sterling is likely to be a dead cat bounce, likely to be a technical rally that gets sold into. And it's interesting that within the sort of fear and contagion issue that we're seeing in markets at the moment, the yen is the key outperformer amongst these forex majors. The dollar has been a strong move, but the yen has been even stronger. We've now seen dollar yen breaking below 110.60, and now it's on the way towards a potential test of 109.35, which is the next key support. If that gets broken, you're looking at 108.10. Now on the upside, you're looking at resistance levels starting to build up. 111.15 to 111.40 has been, I've been taking that as a bit of a sort of a pivot range, and now that is a basis of resistance overhead. So, looking into equity markets, as I said, earnings season has been strong, but it's been unable to really sort of prevent this selling pressure that's starting to come through the market. We're sort of back end of earnings season now, not a million miles from the end, and I think it's going to be that the fear of contagion and the trade tariffs continue to dominate the equity markets in the coming weeks. That's not good news for equity investors really, because what we've seen is markets correcting, starting to break through support levels. You've seen the DAX breaking its uptrend channel. The uptrend channel is actually intact on the S&P 500, but which actually still looks like a bull market correction. But the support at 2,790 to 2,800 on the S&P 500 is key now. So looking at the DAX, big breakdown actually we saw on Friday. Support at 12,400 to 12,493 was broken. That becomes overhead supply. And it really does sort of look as though the DAX is now positioning potentially, if this continuation of the selling pressure goes on, then it's going to be testing 12,100, the key June low. FTSE 100 remains broadly range bound and sort of middle of the road, but certainly the DAX is the underperformer and the S&P 500 is the outperformer still. Now, on to commodities, we've seen that there's been a tug of war between the way that the gold price moves at the moment. The dollar strength is a negative for gold, but then you've got the safe haven bias. But it looks like the dollar strength is winning out, so that's pulling gold lower. We've got gold below $1,204 this morning. That's a key support. That's breaking it down. If it closes below that, look at 1194.50. And to be honest, it really is a change of outlook at that stage. So it certainly looks as though that any consolidation, any rally that we get on gold continues to be sold into. The oil price continues to also have its sort of issues with the trade dispute as well. Bit of a problem with Iranian sanctions as well in terms of how that affects supplies. That means that you're seeing quite a lot of erratic moves, fluctuating moves, shall we say, on the oil price. Supports are broadly intact, but creaking, I would say. You've got the support at 67 on WTI, the support around 71.30 on Brent crude. Both of those are key levels. If those floors are broken, then that is a real sort of changing outlook scenario there. So through the rest of this week, we've got a bit of Chinese industrial production retail sales on Tuesday, but then you start to look at the UK data. You look at UK unemployment and wages, then you look at inflation data on Wednesday, retail sales on Thursday. That run of 3 data points could be a driver behind sterling in the coming weeks. Sterling's been under huge pressure since that Bank of England rate hike, and Brexit has been a key driver, but can the sort of focus be changed to data? Now, if inflation starts to tick higher, wages start to tick higher, that will put a bit of a floor under sterling, perhaps near term, and maybe even induce a bit of a near term recovery. US data basically just determines around that retail sales number that we get on Wednesday for the States, and it's not expected to do too much, so there's not a great deal of US data this week other than that retail sales data, but the UK data is going to be key for sterling, I think, this week. So with that in mind, I wish you good luck in your trading, and I will speak to you next time. Thank you.